part two of our Muni moment, we're going to talk about mega deals and how they are driving a surge in supply. According to data that we compiled here at Bloomberg, municipalities have sold about $216 billion in debt so far this year. That is up about 10% from the same period last year, and it's due to infrastructure projects over $1 billion. Bloomberg municipal finance reporter Aashah Shah is covering the story, and she joins us now. So tell us a little bit more about these big projects that is driving these mega muni bond deals.
So what we're honestly seeing is that this is a reflection of the infrastructure needs across the country. We're seeing airports, water systems, transit agencies, universities, all issuing a ton of debt right now, and a lot of them have big price tags. You know, these projects are getting more expensive to build as inflation costs go up, supply chain disruptions, and so municipalities are just having to borrow more. I was at a bond buyer public finance conference earlier this week, and one of the bankers talked about how a norm has become these mega deals, which are above $1 billion, and on top of that, these super mega deals, which are above $2 billion. So we saw two deals above $2 billion happen in New York this year so far. We've seen one in California for above $2.4 billion. So it is becoming a lot more common.
It's becoming a lot more common. Are these deals being absorbed easily by investors?
Yeah, investors are definitely hungry. I mean, we've seen a ton of issuance in the calendar this year so far. A lot of muni firms are expecting $600 billion of issuance so far, and a lot of it is driven by these higher price deals. And so we've seen May has had a strong issuance calendar, and if the muni market does want to hit that $600 billion number, they're going to have to issue about $50 billion of debt each month for the rest of the year. And, you know, there is some skepticism around that because people are saying, you know, with rate cut changes, with an incoming Fed chair, also with, you know, supply chain and inflation issues, like if we're going to hit that number, but that's the number everyone's trying to hit.
I mean, you mentioned how it's being absorbed pretty easily right now because there's a lot of demand, but are these bigger deals a good thing overall for muni investors?
Yeah, they can be pretty attractive for muni investors because it gives them a lot more borrowing options and a lot more liquidity. And because these deals have become more common, it's actually reduced the penalty that issuers used to face or municipalities used to face when they are issuing such large deals and these higher borrowing costs.